Hi guys, Jesse here with another episode of Bullish Banter. Today we are more specific. We are doing a deep dive into one of the Magnificent Seven. And this year we are starting with the Netflix because it is one of those companies which will be one to watch given the major and mega moves they are doing, especially with the recent announcement that they'll be partnering with the WWE. So some of the gems and aspects we'll be sharing will be how to pick a company. So perhaps if you have been interested or looking forward to maybe this year diversifying your investments, I think you will learn one or two things on how to look at companies to pick on. And then hopefully that at the end of the year, you will be among, hopefully, if the markets rise to the occasion, one of the beneficiaries for the capital gains that you get from it or from the companies you have selected as early as now. I was joined, of course, by the one and only Rufus.
So, hi guys. This will be a very interesting session, taking a deep dive into Netflix. So, if you have any questions or responses, and of course, recommendations are very important. So, if there's any other companies you'd like us to cover, including stock sectors, we are willing to take that feedback and incorporate that into future podcasts. So, make sure to stick around, listen to the podcast, and of course, share with your fellow listeners.
Good afternoon, guys. Yet another year.
Afternoon.
I'm back. Not yet back. I know you are not there last time when I was having a chat with Joe. But I hear you have already begun, seeing and sharing some gems for the year 2024. How was your December holidays?
Well, holidays were really good.
Okay.
Took some time back with family. And once we resumed on full gear.
Okay.
So I think for anyone who has been following the podcast, they know that we started on a big fire on the previous episode with Samson Mzera. So we hit some good talking points around the Japanese and demystifying what's currently happening in Japan and giving quite a good and detailed outlook for the Japanese yen.
Oh, nice. I think we had a chat about it also in the previous event, Titans conference, touched a bit about it. A good session, a good interaction with some of the traders. I think they are now prepared for 2024. It promises to be exciting. I think that is guaranteed. For me, what I'm taking this year, unlike last year where we were looking at recession talks, multiple rate hikes, this year I'm looking at ease of doing business, at least for the US, unlike Kenya.
Yeah.
So that is my, my go-to way to ensure that at the end of the year, we are not talking about numbers of how NVIDIA hit 200 plus. We are talking out of the 200.
Yeah. How much did you capture?
Yes. And we are beginning it as early as possible.
Yeah.
And that means that even today, what we'll be discussing today will definitely form a big part of what we'll see this year. I don't know if you have started already adjusting your portfolio.
I don't think I'm adjusting mine.
You're just loading more.
Yeah, just loading more.
Yeah. I think last year, besides the normal mainstream, Nasdaq, Dow Jones, remember last year I called Santarali. So
Yeah.
this year, I believe the all-time highs you have seen early January
Yeah.
is just the foundation block to a couple of them that we'll see across the year.
Well, for the entire year, I kept telling you about Bitcoin.
It's not like I'm not there. It's just that I get in and out at opportune moments.
Yeah.
So like right now, as we record this on 24th of January, I think it is down almost to 38,000. So I'm looking for an optimal entry price as well.
Yes.
I'm loving the way it always repeats itself.
Yeah,
At 10% sell-off,
Yeah.
think pieces start coming out.
Yeah.
I truly enjoy it. However low it goes,
Yeah.
if you've been in the market long enough, if the fundamentals are good, price corrections is inevitable.
Yes.
And therefore, it is just about you finding where you can definitely, benefit from it.
And if the fundamentals are poor,
well, they are poor, so
the performance will expose you.
yeah. But again, remember what we said on when we had that event on Saturday 20th. We talked about thinking long term while taking those short term gains. So if the fundamentals, or I don't think those are fundamental, more or less sentiments. If the sentiments of the day or of the week are negative, it doesn't mean that the long term view of it is bad. So I would not really much be worried about it. So long as my margin and my risk are well managed, I'm okay with how the positions would be running.
Speaking of getting into today's topic, for the listeners, we are trying to understand the recent performance of Netflix. The company announced its earnings report yesterday, which was the 23rd of January, and it had some big announcements to make, big projections. And now we are trying to understand the fundamentals behind these companies, the books, the numbers, and the projections for the year. So at the end of the session, you'll make your own decision. So a disclaimer, this is not investment advice, and neither is it a recommendation to trade. So it's purely educational. Make your own judgment based on your own research, and as always, practice proper risk management.
I think it's also fair to mention that we'll be doing a couple of unique outliers in the markets this year. So for those who are thinking long-term investment, I think this is an opportunity for you to request whichever company you would want to invest in, and you'd like maybe alternative view to your buyers. So I think that can be a good thing, because last year with the AI and everything, we really covered in general. And I think for those who got in, fairly got a good value for their money. So let's see if this year on a monthly basis, this analysis will be doing, or quarterly basis, outlier companies should be quite interesting, because at the end of the day, right now last year they were dubbed Magnificent Seven, and Netflix forms part of it. And to go back or piggyback to what I said, the all-time highs we saw will definitely be one to watch out for, at least this year, because if Netflix earnings just caused Nasdaq to hit all-time high, and the S&P 500, I expect by the end of the week, when Tesla also releases its report.
Tesla is actually releasing its earnings report today. We'll also be seeing Intel releasing later within the week. So there's a lot of potential of market activity happening this week.
Definitely. Now, Netflix, that is the company we'll be looking at today. I remember back when they announced that they would be reducing or limiting sharing of accounts, password, and everything. There was a negative sentiment around it, significant negative sentiment, and it was also in addition to, I think, reduction in, or rather increment in price. This was just after COVID. Remember, people were staying at home, so you would binge watch and watch and watch, and I think if you had Netflix at the time, you must have watched everything you could on their catalog. And given there were no more production, so at some point it became boring. The negative sentiment seems to have lasted maybe a minute. Because after that, I think that was one of the best performing companies that drove the tech stock, the US 100, to I think last year almost 28% returns. Is it likely that this decade, even though there have been significant entrants by Apple and what is it? Paramount, Disney. Is it likely to maintain the number one spot?
Well, as I always say, if you are going to eat a toad, eat the juiciest. So when I think of online video streaming, there's quite a number of giants, and Netflix tops all of them. So if you compare the revenue coming in to Google through YouTube, if you look at companies like Walt Disney and so on, all of them are competing for the same audience. And even if you have multiple subscriptions in these products, you cannot watch both at the same time. So you'll probably prioritize the one that gives you quality content and the one that gives you the best form of entertainment. So far, I think from 2022, when Netflix, online video streaming beat TV and cable, then from that moment onwards, we have already seen growth in online video streaming. But then in this growth, if you follow the money, you can see that a majority of the money that entered the sector, a good portion ended up in Netflix compared to the other competitors. So looking at the projections for the year, there is over 21% compounded annual growth rate for the online video streaming services. And I think Netflix has a really good opportunity to take advantage of this, especially given their dominance in the market. And of course, when you look at the numbers, they don't lie. So I think a key metric, and this is very important for any investor out there, is to look at the average revenue per user. We call it ARPU. So the average revenue per user for Netflix is really high. So if you compare with a competitor like Walt Disney is making around $6.2. $6.7 revenue per user, of course, per year. But then Netflix is doing more than double that. It's making 16.1. So seeing $16.1 per user, and they have relatively the same number of subscribers, means that Netflix is making more from each of its customers compared to these other online streaming services. But then, of course, there are risks to be checked out, analyzed in order to weigh and see whether it could be a potential investment decision.
Yeah. For me, Netflix is about numbers.
Yeah.
How many people are in the system,
Yeah.
how many people are being onboarded,
Yeah.
and definitely what are the products that they have laid out, in the future,
Yeah.
that definitely will ensure that you not only subscribe for when the big blockbuster is out,
Yes.
but you are constantly, retaining your
Yeah.
subscription base.
Yeah.
And I think this year we have had one. I didn't like the movie, but
Yeah.
the fact that I watched it anyway,
Yeah.
that is a contribution to them. So whether I liked it or not is not is inconsequential to this situation.
Yeah.
I'm sure you know the movie Lift by Kevin Hart. It was an interest-
I've seen the bad reviews.
Yes.
I actually wanted to see it, and
Yeah.
I was like, let me check the reviews first. And
Yeah.
after seeing the reviews online, especially on X,
Yeah.
I was like, no, I'm not wasting my time on this.
Well, I watched it twice, so
Twice.
because the first one what happened. So that tells, I'm sure I'm not alone, because you don't want to be the one to judge on your first attempt. They say you don't judge a book by its cover.
Yeah.
You give it the benefit of the doubt, right?
Yeah.
Before you make a conclusive argument. So that was one of the, if that started the year,
Yeah.
and there is nothing like bad press.
Yeah.
You might say it's bad, but on a Friday night you are bored, you are like, let me check this out.
Yeah.
That 30 minutes you spend is very valuable to Netflix.
Yes.
And that is how I think I look at it as a company rather than investable asset class.
Yeah.
The numbers that they have. And based on I think they added another 13 million clients or subscribers the month of over the festivity period.
Yes.
That's a good thing, because it means we are now out of, remember we had the Hollywood strike
Yes.
around between October there about through November.
Yes.
And if they are able to add, that number,
Yeah.
and I'm sure they now that the strike is over, the writers are back with the support of, some of the movies which were written with AI or with the assistance of, auto-generative AI.
Yeah.
That added some sort of efficiency
Yes.
in their workflow.
Yes.
That is one of the things that I look at in the next maybe 1 or 2 years.
Yeah.
They will be a force to reckon with.
I think with AI, the key scandal that came up was that the company would easily scan you.
Yeah.
So anyone would just sign up their rights. So if they're interested in you or featuring you in one of their shows, they would literally just scan you doing different things. And once they have a complete digital image of you, then you'd sign up those rights to the production companies.
Yeah.
And this would be cents on a dollar compared to the expensive Hollywood stars who would have to be paid higher, and they would be paid every time that they feature, let's say, in a show. So seeing that trend, it led to the big strike that happened last year. But then, from an investor perspective, you can see that if they can do this with cents on a dollar and still maintain positive or quality content for their audience, then they would solve one of the biggest problems that has been facing Netflix ever since it started video streaming. And the biggest challenge they had is that they were the company with the highest production costs. So their movies would be big budget compared to the other companies. And as a result, yes, they would get good sales.
And even attract top actors.
Yes. But then at the end of the day, you're not getting as much money compared to what other companies are investing. But then right now, looking at the average revenue per user, and now that they are cutting costs of production, it only shows the potential of how much Netflix can achieve over the next couple of years.
They are a consumer-driven company.
Yes.
Meaning that should you as a consumer spend more,
Yeah.
then it means they'll definitely make more. And as from the investor side of view, I think Wall Street always look, how much are you paying other people? And then you pay us.
Yes.
So from an investor's perspective, in terms of your dividends, if you see that they bring in a good revenue vis-a-vis what they spend out, it means that you are happy that you'll make a good return. The sentiments in the market will be good. The capital gains will be commensurate with how their shows and the blockbusters are going. And I think what I have liked on how they do it, they have not become this company, this American company that only strives to serve 300 million Americans. They have become this company that strives to entertain 8 billion population, meaning that if you are an Indian or Asian, there are a lot of Asian movies created, shot, produced, and scripted by people of that indigenous region. So it is Netflix, but for you. So it is an alternative to your local. It actually competes with the local, mainstream TV shows or programs in your region.
Yeah, that's what they've been doing. For instance, I remember when they produced Lupine. In this case, it was Italy. You're able to see how they're able to capture that market. Same thing, there was a spin-off for La Casa de Papel.
The Berlin.
The Berlin. Like they're coming up with shows that are targeting a very specific market. Then they're not just selling it in that market, they are spreading it across the world. It's synonymous or similar with how you will see the UK having one of the top football leagues in the world. But then when they're signing players, they'll be signing from, let's say, African countries, they'll be signing from Asia and so on. So when you're watching, let's say, the English Premier League, you can identify players from your own area, so you get interest. But then they are big in that country.
I think that is one of the easiest ways. I think it is Warren Buffett who said, buy a product you know. So if you see, if he's an investor in Coca-Cola, anywhere you go in the world, you will find Coca-Cola. And that money, after paying all the transportation, everything, production costs, that $1 that you have of the 50 bob that you have spent, that $1 comes back to me as an investor. And that is what I think as an investor will be going into 2024. One thing I learned last year is that even though you feel like the company has reached, let's say, its all-time high, that is just another level or another floor has been built, and then we begin the journey to see where else can we go. And I think with Netflix having reached, I think, almost $300 and something last almost 2-3 years ago, right now I think it's on a good path to rise with what they have in store, and with the reduction in overhead costs in terms of production and obviously expansion. I think like there isn't there is this volume, the Kenyan show. I think that is one of the reasons why I was able to subscribe in January. And with internet becoming cheaper and cheaper year on year, streaming platforms and mobile phones, and even the streaming platform itself becoming light for devices, means one thing. Out of the 237 million subscribers or users they have globally, it can only go higher. You can imagine if Apple is selling almost 1 billion units, or people are using their service in a billion people using Apple services. Netflix has not reached a level where you could say it's a $2 trillion market capitalization, but I think it has the potential to be one of the largest companies in the world, fighting for attention besides, the other companies.
Well, I think it's going there. It's headed there. So, for instance, just a quick update on the numbers for our audience. So, as of today, the 24th of January, the company is up slightly over 5% since we started the year. So, last year, it made slightly over 30%. And when you account for dividends, it was way higher than that. So, looking at the company valuation, it's today valued at $215 billion. So with $215 billion, there's quite a number of features that we're expecting this year. So one of them is expansion with the sharing services. So instead of fighting what we call password sharing, of course they did. They fought a lot against password sharing, but then they converted that into a product where now if you have a subscription, you're able to add a new member who is not within your household, and that has helped expand their revenues. So if you have a brother who you are sharing an account with, so you just add a smaller amount of money to your subscription, and from then you'll be able to add more members to your subscription.
And that's a stroke of genius because it allows for what they need.
Yeah.
More users of their platform.
Yeah. In contrast, if you compare it with what happened in Kenya, we saw DSTV being really tough with password sharing. So when they cut password sharing, then they had less number of users. People started looking for alternatives to stream for football, among other sports. So I think for them, they saw the opportunity rather than trying to fight their own customers.
Yeah. Make it convenient for everyone else to see the value in paying for it.
Yeah.
And with a big catalog, definitely you will not regret because not all they are fighting for our attention.
Yeah.
And I think we all have 24 hours. So besides your 9 to 5 or whichever job you do, you also have your time maybe to call your family, cook, relax, sleep and everything.
Yeah.
That 1 hour you spend on them is very valuable vis-a-vis removing you entirely from accessing what you like. That is, I think, something that makes it a good asset or a company to look at. For those who are trading CFD, obviously, those ones don't care what they do on a regular basis. They'll be looking for sentiments of the day. So, for example, I know yesterday, that will be 23rd, they announced that they are going into live streaming, something they have not done before.
Sports live streaming.
Yeah, sports live streaming. Yeah. And I know they'll be competing with a lot of other, streamers.
Yeah.
I know people have nostalgia for, wrestling.
Yeah.
And it is hype and everything. People like, a good deal.
Yeah.
I think since last year, we have seen a lot of mergers and acquisition. They are back and they are back in full force. So our companies acquiring each other, merging, joining business, synergies and everything.
Yeah.
Do you think the continuous rebranding, rescripting, packaging of wrestling due to nostalgic reasons and whatever reason is something that the world needs?
Well, yes. I don't think the younger generation enjoys wrestling as much as we did. Okay. So for us, we didn't have a choice. So there was
on
just
Tuesday evening.
Yeah.
That says a lot about the age, but okay.
So there was just a specific number of TV programs that were really interesting, and you didn't have a choice. Just Tuesday evening, everyone is watching. You only have one TV in the house. You didn't have smartphones, so everyone would end up watching the same programs. But then today we have these choices where Netflix is finding I would call it uncanny competition with companies that are not seeking the same or in the same sector. So the same way we saw smartphones creating a huge competition against chewing gum, now we are seeing TikTok as well as other social media rails like Instagram Reels. We have YouTube Shorts. So you find that a lot of younger people are spending time on these applications. And this is the same time period that Netflix is looking to hook you up into their program. So in that case, you're just swapping TikTok. In fact, I saw a news story last week saying that younger people are preferring to watch movies on TikTok. Like you're watching 30 seconds and then swiping to the next part, rather than just going to Netflix and watching it for a whole hour and so on.
Interesting.
Yeah.
Interesting.
So-
but now, how will you enjoy something, because there is a lot going on within a 2-hour session movie,
Yeah.
or 140 minutes, or 260 minutes, or whichever minute.
Yeah.
But 30 seconds really, you don't get the context. Everything is so condensed to shut. And
The thing
maybe
is,
it's just me.
the attention span is really small, and now with social media, where you're always looking to either take a screenshot of something,
Yeah.
you wanna react to a scene, you don't wanna do the same thing that Jesse would do.
Okay.
Like your generation would just complete watching a whole series, then you will go do an online review on a blog.
Okay.
So for them, they just wanna talk about one specific scene. Yeah.
So from a business perspective,
Yeah.
obviously that would involve a lot of spaces maybe on their servers and everything else,
Yeah.
meaning that for them to stream live,
Yeah.
they'll have to set a date. I think they announced it will be coming 2025.
Yeah.
That means they have a whole year to do a test run and make sure that the stability of live streaming is quite okay.
Yeah.
For me, I would want to know, okay, you're bringing all this.
Yeah.
Is it because due to the huge catalog you have, some of them have never been, because I think last year they released some of the most watched movies and some of the ones which have not been watched.
Yeah.
I think that's a good information, because then you're able to know how many, I think they also released data to show how many hours people are spending watching their show.
Yeah.
Very good information to know, maybe, if people, that explains or gives a full guidance on resubscription in the future dates.
Yes.
So that will give you an idea. Is it that they are bringing WWE to ensure that even though you are talking about short span, attention, but also we have a specific day, that today at 8 p.m. Kenyan time, maybe it will be, or even 3 a.m. Kenyan time, US, maybe it will be around 8:30 p.m. It will be airing live, and therefore it will create a culture whereby the true Netflix and chill will be now chilling, Netflix and chill, because you'll have to resubscribe because you want to see, okay, today WWE or Raw, people tuning like this. Is it a strategy that they're looking to hook people into live streaming to get them away? Because if you look at something like EPL, Premier League, they have managed to maintain subscription rate and everything else because you are waiting for this big match, Sunday football or a derby, and it will be worth your time. Those 2 hours will be worth your time. So they have already hooked people in. You will clear your schedule. Even if you're driving, you will set your small car, your phone there, stream it on your DSTV app or whatever. This is not a prop, but at least that is what people do. Is it a competition to counter that? Or a strategy to ensure that they have like a loyal viewership on a consistent basis?
Well, I would say that live sports streaming is a whole new beast. It's not just like the pre-programmed, let's say, shows on Netflix that we are used to.
Okay.
This is a whole new beast that is a multiplier. I would say it's a multiplier for any video streaming company.
Yeah.
So we saw Disney grow from 0 to 150 million paying subscribers within a year. And a majority of this growth came because they had the streaming rights for the Indian League. You remember?
The IPL.
Yes.
Cricket.
Yes, Cricket League. So they saw their competitor like grow in numbers.
Even
so what had taken Netflix years to get to 200 million paying subscribers, it took it a very short period for Disney. So now that they are going for action sports and they will be live streaming that could be an accelerator to the number of paying subscribers because they are looking to capture that market.
I think I would honestly say people are more interested in UFC, how UFC is one of the most exciting sports, right? And another competitor to Netflix is Apple Plus TV. Apple Plus TV, I think they'll sign a deal with the US League. And they got Messi to be their
brand ambassador.
I'm not really much interested into that because I think EPL is enough sports for me. There is enough sports. But will this be a legit competition and something that can be worth noting or following, given the other, streaming services for sports? Because now it will mean segmentation and, setting aside companies or streaming shows like ESPN as well.
Well, if you're a fan of wrestling and let's say you have a Netflix subscription, then it's an added value to the product. So on the other hand, if you're not a fan of wrestling, and let's say you pay for your household, then Netflix could get new, I would say, new product users as a result of younger people now getting to enjoy wrestling just because it's available on Netflix.
Okay.
So on top of that, if you're a fan of wrestling and previously you didn't have access or maybe it was too expensive for you, now you have a cheaper option of getting that subscription and getting access to other shows with Netflix.
Okay.
So I think it's a big deal, and considering it's valued at $5 billion for a period of 10 years, it's a big move for Netflix. The other angle I'm thinking about is that if you think of action sports, in this case, I'm talking about UFC fighting, boxing, wrestling, they tend to attract a lot of money because traditionally, or over the past 1 or 2 decades, they have only been available to the general public through pay-per-view. But then, in this case, you're just making a subscription, let's say annually, and you get access to all wrestling for an entire year.
Okay.
So in this case, I think it will create a more loyal following because in a pay-per-view, for instance, in UFC, you don't pay-per-view, you don't pay to watch like all the smaller divisions.
You just want to watch the highlight of the day, the highlight show, fight or rather, and then you are done.
Yeah, you only pay when, let's say, there's a fight between maybe somebody like Israel Desanya, Francis Gadou for Africans. For boxing, you're targeting Fury, Anthony Joshua, and so on. But then, if you would be able to pay a subscription and you have access to all these, and it's on demand. So yes, you can watch live, but the recording will still be there.
Yeah, and also you're able to know the graduated scale, who is the upcoming star,
Yes.
who is actually has a very, anyway, doesn't it say a lot about humanity? We like to watch people get beaten. We are sadists by nature, and therefore that is why people would pay top dollar to watch somebody else get beat. Maybe that's why. Maybe they're tapping onto. At the end of the day, if you tap into people's emotion, people will pay premium price for whatever product you offer.
Have you watched Manchester United lose a game?
Yeah. Yeah. I think I would want to see, because honestly, at the moment, you will have to, with also the high cost of living, if they're able to set the price at such a, because I know definitely after the earnings call yesterday, they hinted at increasing the price. I don't believe they just maintain the current pricing structure when they are including new products. So definitely, if the cost of living will be a factor, this is some of the threats at least to its revenue structure or revenue stream. If the price per subscription next year will be quite above what consumers are willing to pay, that will also be a key indicator. I would want to see how people receive that, and therefore if they will be willing to do the annual or the monthly subscription only when they see there is a big fight coming. So that would be another interesting factor that I would want to monitor, besides, of course, the other good things that they are doing for Netflix as a company, as opposed to analyzing the consumer trend. Because for me, for companies like Netflix, which are consumer-based, I want to see how are the people doing pocket-wise. Because if their pocket is not willing to spend more, definitely for me as an investor, my dividend will definitely be smaller.
Well, I don't think it matters. For the way you think about the Netflix product is that once they get you hooked on that product and you are using it as a household, you can't just cut Netflix if you have a wife and kids.
Yeah.
You'll have a big word fight.
Yeah.
They want it back.
Okay.
So the way their product is consumed is a little bit different from other products. It's similar to how when we think like the economy is weak, the consumer is bad, and then Apple releases a new iPhone, it still gets buyers.
Yeah, definitely.
Because their product has its unique relationship with its customers.
Okay.
So that's one thing I'm considering going forward. But then, now that we have established that Netflix is in the business of competing for attention from its users, I think a wild card, and this is a wild card for this year, we are seeing the US elections intensifying. So right now, everyone in the US is majorly talking about the primaries, the progressions, and this will extend all the way to November when the general election happen. Do you think that there will be more hours spent tracking campaigns and political developments compared to the number of hours that would have been spent on Netflix?
I think typically people tend to get political, real political,
Yeah.
around July
Yeah.
when we have the clear front runners.
Yeah.
Yeah. I know Trump is definitely front runner, but right now people are like, maybe will he not? Maybe the legal issues still persist.
Yeah.
So right now it's still too early to say people are focusing on politics.
Yeah.
They are paying it as bit-sized news,
Yeah.
but at the end of around July thereabout,
Yeah.
when the campaigns now hit the road, we have even the VP nominees.
Yeah.
That is when I think politics will sort of take a bit of center stage.
But then, if you think about it like from a bigger perspective, there's literally 40 general elections happening this year across different countries.
Wow.
Yeah. So we have only seen what? I think only two. One of we started with Taiwan.
Yeah.
I think there's a second country that has had general elections, and now we have 38 more to go. And all those in all those different countries, they are also subscribers to Netflix. Yeah, the company is operating in what, 198 countries in the world.
Yeah.
Yeah, so I believe that could take away some attention from it. And of course, we know that Elon Musk is going big on video streaming. So at some point, you'll see an angle having an impact on Netflix.
Okay.
But then, as we said at the beginning of the session, is that the dominant company, of course, always wins.
Yeah, definitely. I think also what point to mention, if you have noticed, censorship and cancel culture has sort of toned down.
Yes.
So I think they'll have an easy time, challenging the societal norms.
Yeah.
And definitely probably better quality shows. I think that is all, at least from my side on Netflix. It will be an interesting company that I love to watch.
Yeah.
If I will not, let's say, invest in it as a disclaimer,
Yeah.
then I can track it as as part of Nasdaq index. I think that is one of the assets which will be driving the price action of Nasdaq this year,
Yeah.
and S&P 500. So for traders who majorly deal with those, if you are not able to buy it on cash equities at $400 or $500 a piece,
Yeah.
you can get in on the cumulative part of the index.
Yeah, now that you've mentioned cancel culture,
Yes.
have you watched Aquaman?
Aquaman.
Yeah.
Not yet. This year, last year, I think I haven't seen any movie because I tried to watch the Marvels.
Yeah.
We are deviating. No, haven't.
Okay, enough said. So to our listeners, I think Netflix is one company that you want to put in your stock watch list. And by putting the company in the watch list, it doesn't mean that you automatically buy it. It basically means that it's a stock of interest. And if you do your own research and you realize it has value, then good on you. And we are trying to push this education so that if you are able to identify opportunities early in the year, then we'll be celebrating together at the end of the year.
Definitely. That has been all from our side. We'll try to do more specific oriented in deep dive. I hope you have learned one or two things about not just Netflix, but how to look at your stock picks at least for the year. That way, with the dollar gaining value significantly against KES, you have a way in which you can store or secure your funds in a more appreciative manner.
Awesome. And also, if you want to register for a new trading account, just check the links below. You'll find a link for registration. And if you enjoy the podcast, make sure to share and like, subscribe. And if you have any comments or responses, we are happy to respond to them. Thank you.
Have a good afternoon.